Hey there, it's Casey Denman, TaxSaleAcademy.com. Thank you so much for joining me on today's tax sale training video. If you are looking to learn about investing in tax-defaulted real estate, make sure you hit that subscribe button right now so you don't miss out on future training videos. Today we are talking about market expectations. A lot of people think when you invest in real estate, you're essentially just buying it and selling it. And of course, those are the two primary actions. But there's so much other stuff involved in running a successful and profitable real estate investment company. There's so many different knowledge gaps that you must fill in. That's the reason that Tax Sale Academy exists. That's the reason that we train countless students to success every single day. We fill in those knowledge gaps. And again, one of these required actions is the expectation of the market that they put upon you. And there's so many different expectations, and you probably know about a lot of them, but here's what I mean. And we'll talk about it from a seller's side today. I'm gonna give you two different examples. The first one is understanding what you're supposed to do, what's customary, what's traditional in the specific area that you are investing in. And a specific example will be who pays for what, right? When you're selling and you have closing costs and that kind of stuff, who pays for, let's say, the title insurance policy? In some areas, the buyer pays for everything. In other areas, the seller pays for everything. So you must know exactly who pays for what traditionally in that area. Of course, everything's negotiable, but if you're in an area where the seller is supposed to provide title insurance, where it's customary for the seller to pay for that title insurance policy for the benefit of the buyer, and you're the guy that doesn't understand that, and you draw a hard line and say, I'm not paying for anything, guess what? Number one, your property now becomes more expensive for that buyer. And if you have two pieces of property, exactly the same, this person is paying for their title insurance and you are not, they're going to choose somebody else's property. And not only that, they also see that a lot of times, because buyers are emotional, they will see that as kind of a jerk move. You probably didn't even understand what you were doing. You probably said, hey, I just want to make as much money as possible. I get that. But by not understanding the customs, the traditions in that area, you are suddenly a jerk and they don't even want to deal with you in the first place. So understand who pays for what in those specific areas. And again, they can vary from one county to the next. Another expectation is when you sell a piece of property, let's say you're selling that same property, right? You need to understand what type of buyer will you have. In many areas, a lot of buyers are going to be using government-backed mortgages, FHA, VA, USDA, that type of stuff. And when you use a government-backed mortgage, the government requires certain things to be in a good condition, right? All the expensive stuff, we're talking like HVAC and the roof, for example. So if you have a piece of property in that area and you're trying to sell it with a bad HVAC and a bad roof, you're probably going to run into some difficulty. So consider either repairing it or disclosing it up front. Otherwise, you're going to get maybe a buyer that's not very educated on how to look at HVACs or how to look at the roof, and maybe their realtor isn't as well. And then you're going to get all the way down through the appraisal process, and then boom, everything's just going to stop. And they're going to say, listen, we can't loan this property unless you replace that roof. And then, of course, you can negotiate it out and all that good stuff, but the roof is going to be required to be replaced if it's leaking, that kind of thing, in most situations based on the appraiser's opinion of that roof. So just understand there's certain expectations there. And obviously what you're trying to do, if you have all these expectations down, your business is going to be able to run a lot more efficiently, and it's going to be able to run a lot more profitably. If you have a piece of property that's tied up for a month and then suddenly, well, the contract falls apart because the roof was bad or the HVAC was bad or whatever it is, that's going to tie up all of your money, all of your capital. It's going to get opportunity costs, maybe even hard costs, electricity, insurance, all that good stuff. So learn about the market's expectations of you as a buyer, as a seller, as an investor, as a responsible homeowner, whatever it is. Learn what the market expects and requires of you when you start investing in tax-defaulted real estate, because again, it's going to make your business a lot more efficient and a lot more profitable. Guys, I really hope you've enjoyed this video. Again, make sure to subscribe to our channel so you don't miss out on future training videos. And also, if you are looking to get started right now in investing in tax-defaulted real estate, two great options right there, Tax Sale Playbook. You can get that book for free by going to TaxSaleAcademy.com and just cover the nominal postage to get it from our warehouse to your front door. Or if you're ready to go all in right now, go to TaxSaleAcademy.com, the same website. There's a link down below. Just click on that join button and become a member of the Tax Sale Academy. Hey, take care, folks. Bye-bye.